Good day, everyone. My name is Laksh Gupta, and on behalf of Mira Asset India, I would like to take this opportunity to announce that we'll be launching Mira Asset Global Electric and Autonomous Vehicle ETF Fund on the 16th of August 2022. And no better person than Alec here, who's a research analyst at Global X, to help us understand electric and autonomous vehicle industry globally, its current status, and the potential it has from an investment point of view. So welcome, Alec. Thank you for taking time out from your busy schedule and doing this for us. So before we jump into electric and autonomous vehicle, if you can help our viewers understand the process that you guys use to identify a theme from investment point of view, and why electric and autonomous vehicle at this point of time.
Sure. So at Global X here, we definitely consider three main pillars when picking a theme. First, we have to have conviction. So we are looking at these structural changes that we hope will change and disrupt industries such as demographics, technology, climate change. And we have to have high confidence that they will come to fruition. Next is investability. When we're looking to bring a product to market under the ETF wrapper, there needs to be at the very least 20 to 25 publicly traded companies. Often we're looking for more than that, that provide direct exposure to that desired theme. So even if we have conviction in a theme, we think it's going to come to fruition, we simply can't bring a product to market if there's not enough targeted exposure with sufficient liquidity. Last factor we're looking at here is time frame. When do we expect this theme to develop? Most of our themes are expected to unfold over a longer time horizon, think 10 to 15 years in the future. So again, these are longer time horizon themes. The timing in the shorter term is less important from our point of view. In terms of the autonomous and electric vehicle theme, it's all about investing in the future of mobility. Just as we think electric vehicles, or EVs, will help chip away at emissions from the roads, we also think autonomous vehicles can lead to safer and more sustainable outcomes. To capture the future of mobility, we seek to invest in companies that produce electric vehicles. We're also looking at companies that are producing these components and critical materials that are used in the production of electric vehicles. And then the last topic we're looking at there is those companies that develop autonomous vehicle technology.
Sure. Thanks, Alec. Just continuing with the EV further, what's your take on currently where we are globally when it comes to electric vehicle, and what would be your outlook going ahead?
Sure, it's a great question. We are seeing significant momentum in the EV space right now. And there's definitely a lot of factors that have not only built up this industry and allowed it to sort of get to the point that it is now, but also in terms of forming this positive growth outlook that we can have for EVs right now. Because of innovation in battery tech, EVs are becoming cheaper and better. According to data from Bloomberg NEF, over the last decade, lithium-ion battery prices have fallen about 17% per year on average. And this has allowed EVs to come closer to reaching cost parity with conventional automobiles. Now, we're certainly not there yet in terms of EVs being the same price as conventional automobiles, but certainly this is something that could happen within the decade, and that, of course, could be very helpful for promoting consumer adoption of that technology as well. Another factor we're seeing is a favorable policy environment. Governments around the world are establishing these accommodative policies for EVs. Traditionally, that has taken the form of subsidies and tax incentives, and we do expect that to continue. You are seeing more and more governments be supportive of, infrastructure in the value chain, such as charging stations and battery capacity, and retrofitting older factories to adapt them to be able to produce electric vehicles. So certainly an accommodative governmental stance around the world has been helpful. Perhaps most importantly, you are seeing traditional automakers make very strong commitments to electrify their fleets. Automakers have committed about $500 billion towards EVs through 2030. So this innovation, this research is going to go a long way in terms of bringing more options to the market in terms of EVs. So we are seeing that these factors have translated into consumer adoption. EV sales more than doubled globally between 2020 and 2021. And we could see EV sales increase another 50% or so in 2022. And this is even in despite of economic headwinds we're seeing towards the automotive space in general and electric vehicles, such as supply chain disruption, rising costs, the prospect of economic downturn. So we do expect EV sales to remain resilient even against some of these near-term headwinds. In the longer term, there is potential for fully electric vehicle sales to more than double between 2021 and 2025. And there are forecasts that more than 10 million purely electric vehicles could be sold annually by 2025.
Sure, Alec. I think just a follow-up question. One of the most talked about points when it comes to electric vehicle is about lithium and battery technology. And I think you alluded to it, by how developing more and more on that, probably in future you will have a EV car, which is, comparable from a cost perspective to a conventional, car of today. And just if you can throw some more light on, the battery tech and how essential it is for the growth of the EV.
Yeah, it's incredibly important. Simply put, right now, lithium-ion batteries are the best suited technology we have for powering electric vehicles. So certainly that's allowed the industry to sort of come to where it is. The reason for that, compared to other electricity storage systems, lithium-ion batteries have, higher energy density per unit mass, higher energy efficiency, overall better performance and stability in adverse conditions. So I guess in simpler terms, lithium battery packs can fit the best performance we have right now into the smallest amount of space in the context of an EV. And that's very important just to allow that technology to work. Also, right now, despite lithium prices are quite elevated against history, but certainly we think it makes the most sense economically, given how supply chains are oriented and the momentum we're seeing in terms of CapEx, both in terms of electric vehicle makers and the battery tech makers, in terms of how there's a lot of funding directed towards that technology right now. So we expect lithium and lithium-ion batteries to be the major force in EVs moving forward. As such, I mean, there's two parts of this puzzle, right? There's the mining side, there's actually the sourcing of lithium, and there's the battery tech side. So it is very important for us to boost lithium mining capacity. And we do expect global demand for lithium to more than double between 2021 and 2025. And about 70% of that demand in 2025 could come from the electric vehicle space. So certainly it shows how important that relationship between lithium and the EV space is. Fortunately, we are starting to see companies in the space begin to take appropriate action to meet that future demand. You're seeing those major miners such as Albemarle and Ganfeng begin to make commitments to dramatically boost their future production. And we see this as overall a healthy dynamic for the space. In terms of the battery tech, like I've alluded to, it's been very important in terms of bringing down costs, but also, meeting basic consumer needs in terms of charging times and range. So certainly improvements to that underlying technology has allowed the space to flourish. But also moving forward, companies are constantly working on fine-tuning battery chemistry. It's incredibly diverse, not only in terms of what kind of lithium you can put in, but the other components, the cobalt, the nickel, the ratio of those elements. And these companies are constantly working on what combinations of battery tech they can do to target these traits of range and safety and better charging speeds and durability for that electrical vehicle technology. So we do expect the next generation of battery technology to continue to make improvements in these areas, and this can in turn translate into more attractive products for consumers.
Thanks, Alec. I think that was a detailed explanation on, the potential that lithium and battery tech has, when it comes to EV, and how it can, subsequently lead to the betterment, for the future car, for the cars that will come by. Let's talk about autonomous vehicle, for a second. And we all know that level 5 autonomy is still some time away. And, let's understand what, as per you, is the potential for the evolution of autonomous vehicle. Where do you see this growing up?
It's a great question. It's a difficult one to answer. Certainly level 5 autonomy, that's the goal for the industry, is to foster this vehicle technology where you're able to drive it without any human interaction. So that's certainly the goal. Many traditional automakers have said they could have level 5 autonomous vehicles or AVs on the market by around 2025, 2024, 2025. So certainly the ability of these companies to meet those targets of halfway through the decade, that's going to have a pretty substantial effect on how the market evolves. So certainly it's going to be a big difference if we can actually, consumers actually have access to a level 5 vehicle by 2025 versus, 2 or 3 years after that. So right now it's difficult to predict how likely those companies are to meet those goals. But, just as traditional automakers are committing tons of resources to electric vehicles, you're seeing the same thing for autonomous technology. You're seeing billions committed. You're seeing millions of miles of testing in the works. So we do see a lot of innovation in the future from these traditional automakers and also big tech names. I think between now and the halfway point in the decade, I think a lot of the improvements to this technology will come at the lower levels of automation. Already, a lot of traditional automobiles are sold with what's called levels 1 through 3 automation. And this is, simply put, sort of basic levels of automation that can supplement a driving experience. So things like basic driver assistance, conditional driving automation, very brief automation, environmental detection as well. So these are promising innovations, and again, they're already being tested by the market. So even if level 5 autonomy is several years away, this could give time for consumers to grow accustomed to this lower level of autonomy, gives time for a more robust regulatory environment to develop as well. So we see that as positive as well. A specific point here too, we do see robotic taxis, autonomous taxis, as perhaps a more immediate growth opportunity for the AV industry. You could see this be an easy, low-cost entry point for consumers. That this is technology that's already being tested around the world. And according to Intel, the total addressable market for robotaxis could reach around 160 billion by 2030. So certainly an interesting technology there as well.
Great. I think with your answer, I am certainly more intrigued about autonomous vehicle, and I'm waiting to see level 5 whenever it does happen in the future. So as a benefit of the viewers out here, what is the portfolio like?
Sure. I'll run through the autonomous electric vehicles, ticker DRIV. First, that index is a little bit more complex there. So again, the index is designed to track the performance of companies that have significant exposure to both the electric vehicles and autonomous driving segments. So companies in this methodology have to have relevant exposure to one of 3 subcategories or major segment keywords. The first is, of course, electric vehicles. So this is simply any company that produces electric or hybrid vehicles. You also have electric vehicle components as the second category. And this is companies that produce the critical materials or components that are used in electric or hybrid vehicles. And then the last segment there is autonomous vehicle technology. And this is a bucket that contains both companies that build autonomous vehicles or develop that hardware or software that goes into bringing this technology to market. So Solactive, which is our index provider, ranks the companies in each segment according to the frequency with which there's a specific keyword that's referenced in accordance to the company. So again, those keywords are electric vehicles, electric vehicle components, and autonomous vehicle technology. The final portfolio is comprised of the top 15 EV companies, the top 30 EV component companies, and then the top 30 autonomous vehicle technology companies. This methodology yields a portfolio containing a lot of the major players in the EV and AV space, names like Tesla, NVIDIA, Alphabet. The portfolio tends to hold a heavy allocation towards US holdings, typically in the consumer discretionary informational technology sectors there. In terms of the lithium and battery tech ETF, that's ticker LIT, the index methodology is a bit more straightforward. To be eligible for inclusion, companies must have significant revenues generated or expected to be generated from business operations in lithium mining, as well as lithium battery tech. Companies in the selection pool are then ranked according to free float market capitalization and chosen in descending order. And then there's a minimum number of constituents, 20, and a maximum number at 40. The resulting portfolio bears out to be about half mining companies and half battery tech companies. And then with a portfolio like this, you're going to see a heavy allocation towards China. And it does, in fact, include directly listed Chinese A shares. In our view, it is crucial to provide heavy exposure to China, given the country's dominance in most aspects of the lithium battery supply chain. And then also the methodology yields a portfolio containing some of the world's largest lithium miners, such as Albemarle and SQM, as well as tier one battery producers such as CATL and Panasonic.
Thanks, Alec. One final question for all our viewers who would be potentially investing into the Mirae Asset Global Electric and Autonomous Vehicle ETF fund. So for somebody who's coming in now, what's the potential that you see, from an investment point of view specifically, and what could be the time frames that a certain investor should look at coming into this kind of a theme product?
It's a fair question. Certainly, we can't provide exact performance estimates, but we do maintain high conviction in this theme. We do classify the autonomous and electric vehicle theme as being in its earliest stage of adoption, what is known as the innovator stage. One of the implications here is that relative to some of our other themes, there is perhaps a higher risk and reward profile for this product. So investors should not be surprised by some volatility in the short term. So I think it's important to flesh that out. But we do believe that EVs and AVs are the disruptive technologies that will shape the future of mobility. And it's likely a theme that plays out over several decades. Despite this long-term horizon, and I think something that's interesting about this theme is there is that long-term potential, but we're also seeing some trends in the near term that could be beneficial for the theme and generate tailwinds there. Besides momentum that we've been talking about in terms of accommodative government policy, improvements to the technology, and so on and so forth, we're also seeing significant efforts to address the current barriers towards widespread EV and AV adoption. One of the largest barriers to entry for potential buyers of EVs is concern over finding a charging station and sort of that convenience of how quickly it takes to actually charge your vehicle. And these are concerns that are being addressed. You are seeing rapidly increasing density of charging stations. You're simply seeing more of them, which is very healthy for the space. You're also seeing developments in fast charging technology, which could drastically improve that convenience factor. An example of this is the Infrastructure Investment and Jobs Act in the United States, which after full implementation could increase the number of charging stations in the United States by about 7 times. So certainly a dramatic improvement there. AV technology could take longer to gain widespread adoption, as we were discussing earlier, but again, these lower levels of autonomy are being tested by the market today. You could see continual improvement there, and we do expect to see continual testing of level 4 and 5 autonomy yield better outcomes for this technology, especially in inclement driving conditions. So you are seeing this improvement for the technology that could help mask the weaknesses that currently exist there. So I guess to summarize it all, we're both excited about the strong momentum we're seeing for the theme in the short term, but also the long-term potential. And also you are seeing this technology that could make improvements that could be very beneficial in the short term as well.
Thank you, Alec, for taking your time out and doing this for us. This will certainly benefit all our viewers for the fund Mirai Asset Global Electric and Autonomous Vehicle ETF Fund of Fund, which we are launching on the 16th of August. So thank you for doing this for us. Thank you to all our viewers. Please take care and stay safe.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.